Hello, thanks for coming by to my channel, My Two Cents About Real Estate with me, Marcelo da Silva. I'm a realtor here in the Phoenix metropolitan area in Arizona, Maricopa County. Before we get started to our topic today, I would like just to give you a really quick overview about the real estate market here in Phoenix. Today, February 28th, we only have 5,107 properties available, from the least expensive to the most expensive luxury homes, from all sizes, different number of bathrooms. That's between single family homes and condominium. These are the only properties available here, 5,107. We are very competitive market. Here is still a lot of multiple offers. Nonetheless, these are all the only properties available according to the multiple listing services, which is the MLS. And going to a topic that directly affects the real estate today, which is interest rates. A lot of noise out there. We hear different opinions about where we should be heading regarding interest rate. The only thing for sure is that they will keep going up. However, how much is that? What is people are talking about? 6-7%. Let's cut out all the business, all the noise, and see exactly where we stand for that. One thing to take in consideration when you talk about interest rates, and it's very important, is the 10-year yield rate for bonds, which historically has a correlation with the mortgage rates. And historically, the average between the spread, that is, the difference between the 10-year rate for the bonds and the mortgage rate has been 1.8%. Some economists, some people say 1.7, but it has been 1.7, 1.8%. That has been the difference between the 10-year yield rate and the mortgage rates. As we stand today, we are 1.8 as far as the 10-year yield rate for the bonds, the treasury bonds, 1.8. And how will we going to be in the future? How it's going to affect the future? Let's dive in and cut out some business, some noise about the 6-7%. Today, there are like three associations, three data that we should consider, that I would recommend you to consider. You can go on Google and check it. One of them is the Mortgage Bankers Association. If you look at the forecast with the mortgage rates, the 30-year mortgage rates, they are projecting for 2022 4.3 interest rate for a 30-year mortgage, and for 2022 a 4.3. And for 2023, they are projecting a 4.5% mortgage rate. If you look at the two quasi non-government institutions, Fannie Mae and Freddie Mac, which backs up the conventional loans. If you look at their projections, they are looking at Fannie Mae for 3.7% in 22 by the end of the year of 22, and 3.3% by 2023. And Freddie Mac is projecting by the end of the year 3.6% interest rate, 30-year mortgage interest rate, and 3.9 by 2023. Having said that, what is the projections? So basically, will be between 3.6 to 4.3% mortgage interest rate by the end of the year for 2022, and for the next year between 3.9 and 4.5%. These are projections, forecast. A lot of things could happen. Black swan, a black swan like the Ukrainian crisis that we are going through. We're going to have to watch for the next few weeks to see how this is going to affect the mortgage rates. But a lot of noise out there. We should not be heading to a 6, 7, even with the noise that we're having with the inflation, the projections are for the inflations, and even at those levels we will be at pre-pandemic level, and we saw how it was on pre-pandemic level. Pre-pandemic, the market was not as hot as it was during the pandemic, these 2 years that we've been going through, but was kind of a normal, even though it was very competitive as well, depending on the market there were, but it was not across the board. So these are some food for thoughts for you to think where the interest rates are heading. Try to follow the 10-year bond rates, and you'll see that the spreads are pretty much 1.8 so far, and that will give you an idea what we're heading to. Are we going to see low interest rates? It will be in the foreseeable future. That will be hard due to the inflation that affects the 10-year yield rate. It will be very hard for us to see again those rates at a 2.5% or 2%, 2.5% or 3%. The trend now for a while will be going up. However, it's not the tragedy that we hear out there. So let's cut out the noise, look at the numbers. It's not as worse as people are talking about. This is my 2 cents about real estate. My name is Marcelo da Silva, a realtor here in Phoenix. Let me know if you like this topic, or if there is any other topic that you would like me to talk about it. And send me a message, give me a like, and I look forward to talking to you and answer your questions and engaging with you. Thanks for watching. Have a good one, everybody.